Africa Prime, brought to you by Jamison's Select Reserve.
Welcome back. You're watching Africa Prime, the show that brings you insight into pertinent issues on the African continent. Still with me in the studio, Simon Freemantle, he's Senior Analyst, Africa Political Economy Unit at Standard Bank, Martyn Davies, CEO, Frontier Advisory, and Daniel Kinnear, Senior Executive Associate, Africa Strategy Group. When we went to the break, Daniel, you were explaining the China dynamic. And when I was preparing for the show, one of the things that I found, in fact, there are 4 things that I wanted to raise here. The big difference that's taking Africa's growth into a new dynamic is, one, private investment, the involvement of the private sector in Africa's infrastructure development. The China number that we just talked about now, the higher commodity prices that we've seen around the globe, and the political will across the African continent. And we touched parts of this at the beginning about how African governments are beginning to perhaps channel money into the right sort of areas. But let's begin about private investment first and talk about the difference that private money is making. But I have a broader question, and let me begin with you, Martyn. Is private money the answer to the big problem that faces Africa, the lack of infrastructure?
Well, I think there's a number of issues here, Godfrey. Firstly is that, is private equity the sort of rising trend in the continent? Well, you've got 23 effectively stock exchanges in Africa. Of those 23, I'd argue maybe 12 are functional. Of those 12, the JSE, now that Egypt sort of fallen off our radar in the last quarter, JSE probably accounts for 95% plus of all portfolio investment flows coming to the continent. So that's significant, sort of weighting down here in South Africa. I think the second factor is that considering the level of illiquidity in many of these stock markets, effectively, even if it's a public investment, on a list for listed equity, because the size of transactions are so small, it is effectively still private equity. So I think the challenge is, we talk about integration across the continent. We often think infrastructure, you say roads and rail, but integration is just as much capital market lined as it is hard infrastructure. So I think increasingly private money is Chinese money, as you allude to. Private,
Chinese money is not quite private money,
it's sovereign wealth, but for private business.
Okay.
So there's a nice sort of hybrid sort of model coming through there, which of course is, I would argue, is very developmental for the continent. So private money, is that the way we're going? I think certainly is, and a rise of private equity in South Africa, and Africa, as you know, is extremely strong.
Yeah, Simon. Do players like Standard Bank start taking a bigger role in trying to address some of the deficits that we have across Africa? I mean, if you look at just the numbers around power, for instance, they're shocking.
I think, you allude to the importance of private money, and that's certainly of fundamental, critical importance for Africa, as is the type of money and lending that we've seen from India, China, and some of these new non-traditional partners. And increasingly, I think we'll see the same from our traditional partners. What's created in the last 5 years has been a multipolar environment. We've seen these new partners, these new powers, supplementing rather than supplanting our traditional partners, and they still are by far the most prominent players in terms of FDI and in terms of infrastructure financing from abroad. So we need to remain cognizant of the fact that it's not all a shift towards these new partners. The old partners still very relevant. For private institutions, particularly financial institutions in Africa, the opportunities are immense, but many, particularly in infrastructure, many of the risks and many of the challenges still prevail. And I think what we really need to see more of is more infrastructure prioritization along regional nodes, and we need to see more guarantees from countries within regions that projects that cross borders, one-stop border posts, highways between national capitals, railway projects, ports which have a regional focus, are bought into by the entire region, and in some way the risk is offset by the multiple partners involved. Because there's a very strong role for private financing in infrastructure, and we've seen that in telecoms. The vast majority of financing for telecommunications infrastructure in Africa, our fiber optic cables, our new cell phone towers, is private money, and that's coming because they can see the commercial benefits of investing in that infrastructure.
Yeah.
We haven't yet seen the transmission of that commercial benefit in power and water and sanitation and so on.
Yeah.
So that's a gap that needs to be filled largely by governments, donor institutions, but also by the private sector as well.
Yeah. Daniel, now the money man will say, of course, it's private money that's making the difference. Remember where he comes from and where he works. So we understand why he talks about the importance of private money. Granted, the evidence is there on the ground, but is private money beginning to make the difference that Simon alludes to, in your eyes?
Yeah, I think that we shouldn't begrudge China for the opportunities that it has identified and exploiting, which Martyn was touching on earlier. And so everyone stands there on the sidelines and says, well, look at where China's going to, and look at the opportunities in this. But I think the opportunity for Africa is to diversify the origin of sources of funding into certain critical sectors like infrastructure, for example.
Yeah.
But Africa has to also do things like harmonize the regulatory space. It has to look at the establishment of stronger and more transparent and more ethically run institutions.
Which brings me to the key question that we raised earlier around political will. Is it there? I mean, he talks about the need for governments to put in place the right policies so private money is able to come in. But is that political will there? He cited Ghana, but isn't it just one of maybe a few examples?
Yeah, there's political will.
Is it there?
I think it is. I think it has expressed itself at the recent conference hosted to try and create some sort of coordination between the COMESA, SADC, SACU, East African community, where trying to liberalize and make the borders more transparent and more accessible, markets be accessible. But I think fundamentally, I think a lot of the move in that direction has been under duress, being compelled that if you want to borrow money, if you want to, or whatever it is, you have to change. So I think there are more, the middle class has grown in Africa over the last 15, 20 years. So there's a beginning, and I think
it is forced, and I think that's the key word that I want to pick up from you. It is forced, and the numbers back it up. If we look at the trade stats, Martyn, they show that intra-African trade sits at 8.9%. Africa does not trade within itself. And also, something else that I picked up, and someone was really talking about how silly it is, it's like the suggestion that Africa actually needs to connect to itself. Why is it so difficult for Africa to build bridges so Africa is able to move goods and services amongst African nations?
Look, I think that in our slight defense, there's one
Don't
reason.
go defensive.
There's one region that inter-regional trade is even less than us, Middle East. If you have economies that are so often single commodity dependent, your trade is always your inter-regional trade is always going to be extremely low. It's only when economies start to manufacture, i.e. beneficiate, create more value, move up the value chain, so you'll see an increase in intra-regional trade within that specific region. I think the second factor around infrastructure you mentioned is regional economic communities. You mentioned SADC, COMESA, EAC, ECOWAS and the like. With few exceptions, these institutions are largely dysfunctional. African governments, despite the political rhetoric, and political will may be there, but I'm more interested in political action. And there's a big gulf between the two. I think the infrastructure play, the very, very bad linking infrastructure, as Simon said, linking highways. Why are highways not linking country capitals across SADC, for example, or East Africa or West?
Or you look at Bridge, the congestion that's there.
So before we start talking about a $750 million people free trade or liberalized trade zone, let's get our border posts functioning correctly.
Okay, I've got 3 minutes, and I want 1 minute from each of you guys to give us what African governments need to do to get the advantage that we're currently seeing now. We've got Europe mired in crisis. We've got China looking at Africa, and we've got money that's looking at Africa. What does Africa And what do African governments need to do to get the equation right? Where do I begin? Let me begin with the money man.
I don't know if I'm the money man, but I think the ultimate potential that lies in Africa is essentially going to lie with its human capital. You've got a population which in the next 40 years is going to double, and you've got tremendous innovativeness, entrepreneurship. Earlier we spoke about our African governments are being forced. I would disagree with that. I think there's a nascent groundswell of accountable leadership within Africa that's coming from the youth.
Some people will be dragged screaming and kicking like
absolutely. Some need to be, but I think there's a lot more positive developments there than we give credit. And I think that's going to come from the people, the human capital, and the policies that are implemented to manifest the benefits of that demographic dividend, of that human capital equation. Those countries will excel in the years to come. And I think that, in combination with infrastructure and governance and so on, is going to be the critical defining feature for us.
Martyn, your minute.
We'll all agree on the basics: good governance, infrastructure, education, and the like. I think there's two factors that I would like to be a little bit sort of creative about. First one is the countries that increasingly will succeed are those which are aligned to the new sources of capital, the likes of China, India, and the like. Embrace that capital coming in, as well as to enable the resources typically to be exported to take advantage of an opportunity of commodity demand, particularly coming out of Asia. The second fact is African states and governments need to better understand competitiveness. We spoke about this recently at the African Economic Outlook report launched last week, was that what concerns me is we have robust growth. And let's not get too excited. 4% is not good enough. Sure. It's not good enough. If India is getting double that, if Indonesia, Vietnam, China are getting double that, 4% is not good enough. So how do we improve that? With this relatively good growth we're getting, we still have declining competitiveness in these respective countries and regions I'm talking about in our region. So African states, governments, in conjunction with business, need to better understand competitiveness and create an improved environment domestically to enhance their own competitiveness for sustainable development and growth.
Sounds to me like someone should be talking to Julius Malema. Tanya.
Well, I think that the African government should be creating conditions domestically for African entrepreneurs, because I think that's where it's going to drive the economies. And with that, it'll send out a message, signals to foreign investors that there is a space within certain economies where there's the opportunity to grow and generate wealth. And that'll come in with the governance and more democracy and more stronger institutions.